Balance your trading strategy by adding futures. CME Group helps you manage risk and capture opportunities in all market environments. Capitalize on around-the-clock access to highly liquid global futures and options market across all major asset classes. Just visit your online broker and get started. Plug into valuable educational materials and trading tools and see what adding futures can do for you at cmegroup.com/onthetape.
Hey, this is Dan Nathan. You're listening to the podcast version of Trading Spaces. It's a live Q&A that I do with my on-the-tape co-host Guy Dami every Monday and Wednesday at 1 p.m. Eastern on Twitter Spaces. We hope you enjoyed this episode, and thanks as always to our presenting sponsor, CME Group. Here we are, top of the hour. It's 1 o'clock. It's Monday. I'm Dan Nathan. Your Guy Adami. Amanda Diaz was just here. This is Trading Spaces. These are sponsored by CME Group. They're the sponsor of our podcast that we do with Danny Moses, our co-host, that drops every Friday in your favorite podcast store, right, Guy? Do you have a favorite podcast store? Say that.
Yeah, I do. It's
fast.
actually, there's one in Morristown that I go to from time to time. It's right next to this coffee spot. It's
Yeah.
Fabulous podcast store.
All right,
They have
fair
the
enough.
podcasts. And the beautiful part about it is the shelves are done so well that you really can find what you're looking for.
True. There's a
very
dad
quickly.
joke there, people, if you didn't get it. This is Trading Spaces. Guy and I do these every Monday and Wednesday at 1 p.m. Eastern. All right, Guy, let's get into it. Let's talk markets. Listen, this is a huge market day. Guy, just so you guys know, popped out of a business lunch that he's in right now to do this with us. But he was checking out the markets. Before that, I think, Guy, what's going on right here, if you just popped out of lunch and you only saw the headlines, right, that you saw that the NASDAQ was down, I don't know, 0.5%, and the S&P 500's up, I don't know, like basically 35 bips or something, you'd say nothing's really going on. Something's going on here in a big, big way. Look across the board here. Internet names are getting absolutely destroyed. Anything like high valuation in the SaaS space or work from home or anything like that, absolutely getting destroyed. All these old crappy like SPAC names are getting destroyed. A bunch of the cannabis stuff is getting destroyed. Square is down 7.5%. PayPal down 3.5%. It's like
look at MasterCard. I mean, this is the thing, something you've been on for a while. I mean, the move in MasterCard over the last, I don't know, I want to say since middle of July when it was close to $400. I mean, that move is a staggering move. We've seen downdrafts in MasterCard over the years. Obviously, the biggest one we saw was in February, March of 2020. We get that for obvious reasons. But this one is significant because we haven't seen something like this. I think the last time we saw something of this magnitude was in the fall of 2018 when MasterCard traded from about $230 down to, I think, $190 or thereabouts. So here we are with MasterCard giving it up. I only mention that because, this has been one of those stories that seems to be impervious to valuation. Now I think people are saying, wait a second, maybe these stocks are a little too rich. So keep an eye on MasterCard, Visa. I think you're right to point out the payment names, but I hate making predictions. But I'm telling you right now, the S&P is going to close negative on the day and in a meaningful way because what's going on below the surface is problematic.
Well, that's 100% the point, because if you look at Apple up 2%, look at Walmart up 1%, Home Depot up 1%, Exxon up a couple percent, Tesla up 3%, JP Morgan up 2.8%, and Bank of America up 2.5%. That's your S&P right there. But everywhere else, it looks like an absolute bloodbath. And so, like, for instance, Zoom is reporting tonight. Zoom is down close to 60% from its all-time highs made late last year. The stock is down 4.5% into that print. CrowdStrike had a disappointing result last week, and guidance, the stock got creamed last week, down 7.5% today. Asana down 19%. I mean, the list goes on and on and on. Anything with high valuation and maybe like questionable sort of like growth prospects here because they're decelerating is getting slammed. And I wonder, does it have something to do with rates? Does it have something to do with the move in the dollar? I think Danny Moses is here. Danny, did you just join us? He is our co-host from On the Tape. We just mentioned him here. Danny, you there?
Well, first
I'm here,
of all,
guys.
Before Danny starts to utter a sound, let me say this is the same Danny Moses that is now 14-1. Yes, that's what I just said. 14-1.
I think it's 16-1, Guy.
16-1 now in the NFL, which is I don't think people fully understand how ridiculous that is. I mean, in terms of standard deviations, that's like an 8 standard deviation away from what even the best people do. So kudos to Danny Moses of the Big Chill. I love what he's been doing on that movie, and what he's doing in the NFL is remarkable. And before he starts to opine, I'll say this for the 100th time. The volatility in the bond market, which should be the most liquid asset in the history of mankind, is disturbing. I mean, here we are, 10-year yields now, 161, I think, ish, traded down to 143, I think, a week or so ago. I mean, 10-year yields should not move like that. I don't give a shit who Fed chairman is. There's a problem in the bond market, and we just haven't. It hasn't manifested in the equity market yet.
Yeah, my son just got home from college and he opened up his computer screen. He's trading 7 different coins that no one's ever heard of. The market caps on each one are 3 million, 2 million, 1.7. They go from $100 valuation in his account to 700 back to $50 in a matter of seconds. And I told him, and he's pretty smart. He's not going to get caught in it, but I'm like, that's what you see kind of at the end of anything. And granted, those are very small numbers and small market caps, but that's where we've gotten is, easy money has kind of been made here. We're kind of at the tail end of it. But Dan, you just said, I mean, this market, whether Guy's prediction, which is pretty bold, I love that kind of stuff, is will the market close down today? I don't know, but either way, don't look at the S&P to tell you how the market's doing, because underneath it, it's really bad. And yeah, Powell was going to get it, but why is that better for the market than Brainerd? I mean, on the margin, obviously, you want to.
Let me answer that real quick. You're right. I think it's the uncertainty that Brainerd would have brought, which would have been a problem. But in retrospect, I think she would have been incredibly bullish for the market, and I think they would have figured that out. I think just knowing there's going to be the continuity that Powell being renamed is going to bring to the market, I think that's the solace that the market took today. But I think, to your point, I think the market's going to come to that realization and say, wait a second, maybe Jerome Powell's not what the market needs right now. Maybe we need another influx of this extraordinarily dovish Fed. And, I think in Brainerd you got that. I think in Jerome Powell you don't.
Agree.
Okay. Danny, I want to hear more about the shit coins that your son's trading. I'm just kidding. Hey, by the way, I told Amanda this earlier. I just as the kids say, I aped into a couple NFTs last night. I literally bought 2 within a matter of an hour. And again, why? I have money sitting in not money. I have crypto sitting in an account. I don't consider it money. I'm listening to Twitter Spaces. I'm following some of these projects and some people I know, and they're into these things. And I said, you know what? I'm in. So I bought a couple of things. I feel amazing. I have these cool little JPEGs in a wallet on my phone. And so to Danny's point, if there was ever a sign at the top, your kid trading shit coins in his Robinhood account or me aping into NFTs in November of 2021, there it is, people.
He just drove off, but he's trading something called Keys or something like that. And one of his friends created. I mean, anyway.
So it's a pump and dump. All right, Danny, what's your take here? Dollar rates moving higher. Do you think it's connected? The high valuation stocks are getting pummeled today. Is that something you want to draw a connection to?
I see the VIX is up today, if I looked correctly. I think it was up 3 or 4%. Is that correct?
Yeah, it's 1840.
I mean, granted, it moves back. That's telling you that there's percolations going on in the market. But, rates are going. Listen, I'm of the firm belief that when this thing is all said and done, that we'll have an inverted yield curve when it's all over, and that the 10-year may not be the correct measurement of what's going to happen potentially to the market, because it will basically start to price in what a Fed, if they're forced to raise rates, will do. And listen, we can't afford higher rates because we have too much debt. I won't go through that now, but and then one thing I read that was really interesting is that it's possible that pension funds have achieved their risk-adjusted returns that they need, and they're going to start to move back more into bonds. So you're going to have a lot of year-end stuff that's occurring that may not be indicative, maybe more technical in nature than trying to read through what the inflation looks like. And listen, the market was telling us 2 weeks ago that there was a slowdown coming in Europe, right? Rates weren't jiving. They weren't making sense. You could see what was happening with oil prices coming down a little bit. So I don't know, Dan, a ton of moving parts. I try not to read too much into the day-to-day moves, but I do watch the 210 spread to me, which is going to tell me a lot of what I
flat. Hey, Guy, did you check out that there was an article in the Journal talking about supply chain disruptions abating a bit, and it seemed like every other paragraph they were talking about some of the energy issues and some of the factory issues in Asia. But then it would be like, but CEOs here in the States say this, so it was basically try to, yeah.
No, I understand. And they can at this point, they can only abate. And I'm not trying to downplay it, but I mean, if you think about it, it got to levels that I don't think anybody in their wildest dreams could ever thought imaginable in terms of some of the backlogs at these ports. So, I mean, abate is true in the truest sense of the word, but that doesn't mean we're any closer to sorting this thing out. I mean, I still think we're months, if not longer, away from getting back to some normalcy. So, yes, it's good news that these problems are abating, but abating is a word. You have to take it in context, right? Where have we been?
Yeah.
And I think that's something
No, I
to
know,
take
but
into consideration.
last week you saw that Micron CEO made a comment similar, and the stock rallied in 2 days, 10% at its highs, this morning. And I just think that if we get into Q4, as we are, further into Q4, towards the end of Q4, and if you do have CEOs mentioning such, you know what I mean, like that's going to be really important as it relates to sentiment. Because again, it's going to start pricing it in
Hey, Dan, I got a
before we
question
see it.
for you.
Yeah,
I got a
brother.
question for you. How do you weigh that against drop in demand, which I know you've been talking about potentially we're going to see a slowdown. So I can tell you that containers are dropping. They were 2,000 a year ago, went to 710. They went to 22.5. They're back down to 15,000 right now. So it is starting to come down a little bit. But a lot of the inflation stuff that is stickier than that, like, yes, those are somewhat temporary. Those should abate. Obviously, that's a supply and demand issue. But how do you weigh those two together? Is that a good thing? I mean, yes, so things are going to slow down, but why would they be slowing down? Are there more containers being built? Is there less demand? Like, what's the reason? And then to me, the wage inflation is just stickier than all of this stuff. And to me, that's the real problem. And that's where you can lead into a stagflationary environment down the road when you have sticky wage inflation and maybe all the other stuff comes in because demand kind of wanes. So I don't know.
Yeah.
A lot of stuff.
Well, the one thing that I think that you and I and Guy are certainly not economists, and we're barely strategists. The one thing that we haven't had to think about during our careers is wage inflation at all. If anything, it had been going the other way. And the three of us have been talking about on the tape over the course of this year that, prior to the pandemic, one of the biggest factors in the entire economy was actually, the effects of globalization and deflationary pressures on wages, right? Due to automation and a whole host of other things. So I just don't think, I've said this to you guys before, they may stick for a certain part of, like, whether it be manufacturing or different areas in the service sector or whatever. But again, I think those jobs are going to contract again. It's not like we've seen this massive push towards onshoring that was supposedly one of the big goals of the trade war, right? That we started in 2017. So do you guys see, like, new factories popping up, making the things that we are in short supply of right now here on our shores? I don't, because I think at the end of the day, if you think about what happened with globalization over the last 40 or 50 years, this was like a deal with the devil that the U.S. consumer made to have cheaper products and manufacturers here. And so I don't know. I just don't really see that changing.
That was made under the Nixon administration. I mean, be careful what you wish for because you might get it. And here we are now, 50 years later. But I'll say this to you, and I'm going to wind Dan up here, but I know Danny is probably with me. But for the Fed to think they can somehow control the employment market, the job market, is an effing joke. I mean, lower rates do not make people hire more people. It's mindless. I mean, I even took one day of economics in college. I mean, it's a joke to think that lower rates somehow encourage people to hire. It's ridiculous. So the fact that that's still a mandate is problematic.
We don't have a
Danny,
demand problem. Sorry, we don't have a demand problem. We have a supply problem, and the Fed can really do nothing right now. Even if things slow down, what are they going to do? There's not enough supply, kind of things that are out there. And I'm in total agreement with you. And no one, like we talked about before, the average age of Robinhood trader is 31, right? All that investor knows is the Fed's got your back and printing money. It's not realistic to think we're going to be in hyperinflation, but it's also not realistic to think that we're in this prolonged period that this is normal when you're printing money. But we know one thing: if rates go higher, it ends everything, and that's 100% certainty. I mean, whether that happens or not, I don't know. But we know that if it does happen, it's going to
So
be.
wait, what's the impetus for rates to go higher here? The Fed announced a taper. Expectations for rate hikes have been pulled forward, except that, Guy mentioned the volatility in the 10-year U.S. Treasury yield. And it's really been, 20 basis points, really between 1.41 and 1.61 where it is right now. But it doesn't seem to be like, what is the thing that breaks it out the way the dollar just broke out?
No, it would be the inflation expectations continue to move higher. Wage spiral prices, continues to
Right.
happen that he's most fearing. And like I said before, I'm not going to look at the 10-year. I'm looking at the 2-year because that to me is more measurement, or at least closer to where the Fed can kind of control. And if that starts to move up, or we go back to double digits in terms of the 210, I don't know where we sit right now live, but to me, that's a real danger, because you're only going to get an accelerating 10-year yield if you believe we can maintain growth with all this inflation. And if that happens, it will be self-fulfilling that we will cut off the growth that's coming as a result. So, there's a lot in there, but there's a lot of different ways this thing can go. But I only see one direction, and that's volatility in the rate market, which we're going to keep seeing for a long time.
Anything fundamentally, guys? Why? I'm just looking at like Airbnb down 7%, Lyft down 6%, DoorDash down 9%, Snap down 5%.
Look at the ARC complex today.
Yeah.
Complex today. That tells you where you need to know with all the shit.
I also think, the comments out of the health, whatever the health official, whatever the guy in Germany is, basically there are three outcomes: death. What did he say? Death, vaccinations, or something in terms of the by the end of the winter for Germany. I mean, those were some pretty draconian comments. I think people are starting to take notice of what's going on in Europe. So I think that's part of the whole the story that you just mentioned in those stocks.
Yeah, it's funny. The story in Europe didn't get a ton of play here. There was a lot of rioting. There was actually, I think, in the Netherlands, the cops shot or shot at protesters and stuff like that. I mean, just let's be clear, that's never happening here again. There will not be any lockdowns. I mean, we will go back to the more, and I don't mean to sound insensitive, but like to the container morgues on the streets and stuff like that. This country would literally blow if we did that again. But I don't know, for whatever that's worth. What's going on in the autos here, real quickly, Guy? I know you got to hop in a few minutes here. You see that Ford's up 5.5%, GM's up 2.25%, AutoNation up 7.25%, Tesla up 3.5%, and then the Lucid and the Rivian are going the other way. They're down. Is it? I mean, listen. When Rivian and Lucid find a home for like their market caps, their valuations, that sort of thing, Tesla is obviously divorced of anything like that. It just continues to bleed into GM and Ford. Do you think? I mean, like a little
exactly
that
right.
pixie dust.
I think that becomes zero sum, and I think, in a world where now people are starting to look at valuations a little more close, I think they find that in the form of Ford and GM. Plus, look, Rivian had a huge run, giving a little bit back. I think people realize, wait a second, that's a bit of a lottery ticket. I think in Ford and GM, people can wrap their head around a stock in terms of Ford. When you put a 15 multiple on it, you can make a compelling case that the stock is $23, $24 in terms of forward earnings. Same thing with GM. And this is not me talking in a vacuum. I've said this for a while on Fast Money. I'm probably a little late to this, but for the last 9 months or so,
late. You've been saying it for a couple of years, bro.
Yeah,
You've been saying they're way too cheap, way too cheap. Hey, Guy and Danny, do you guys have any take on Wynn and Las Vegas Sands? They're both ripping today. What's going on there? Because they're going the opposite way of some of these sort of like reopening trades.
I haven't looked in, so.
Guy Dami, this is your wheelhouse.
That's the flip side of valuation, though. Those stocks are way too cheap, and they got those names. Those two specifically got beat up in all the things that went down with some of these Chinese internet names. So I think people come to the realization that, wait a second, I get it in terms of the story, but at a certain point, these stocks are just too cheap, and I think that's what's happened specifically with LBS, but with Wynn as well. And also, there's some stories around Wynn that are stock specific.
Okay. All right. Guy, you got to hop. I think we're going to bring in, we have our friend Guy and I were on at Twitter Spaces on Friday. We had a lot of fun with these guys, Stock Market News, and I think Stock Talk Weekly. I think Stock Market News is there. These guys have these spaces and they go, like anytime I look up during the trading day, they're on there chatting and talking about a lot of really smart stuff. And oftentimes things are not on my radar, which I enjoy popping in every once in a while and hearing what they're up to. But so if he's around, Amanda, let's bring him
Listen,
in.
I've enjoyed this. I'm at a 5,000 right now.
Guy, you rock, brother. Hey, thanks, bud. We'll talk to you later. I'll see you on Fast Money. Hey, Danny, real quickly on maybe we'll bring our if our buddy Stock Market News comes in. What about this disconnect between, like, God, look at Peloton down 6% today, Zoom down 4%, Chegg's down again. I mean, these kind of workout. Remember the Niedermeyer stocks we were talking about? Dead. I mean, there are no lows low enough for these things, man.
Well, we talked about it. Where is the buy point? Where is the valuation where you hold your nose and say, you know what, that's just too cheap? They're just not there yet. And so you have Mo money that's, leaving it, and the value guys or true institutional investors aren't there yet. And that's what you're seeing, I think, across the board. And we've talked about that. When this ends, what is the point where you know that it's over? You don't. It just keeps going lower. And people inevitably in the retail sector, as an investor, not in the sector itself, trade that way. Get me my money back. Get me to even. I'm going to hold until I get my money. That's why charts work. That's why Carter makes a living, and charts become self-fulfilling. So you can see where the support and resistance, and I think that's when you go to the technicals on names like that, see where this thing was 2 years ago before things got. So, I mean, that's really all it is. And I think the fast money is starting to evaporate a little bit here, slowly but surely. It's a cut.
Well, keep an eye on this name today. Roblox traded nearly 142. It's trading 122. It's trading at a new all-time high. This is a stock that before its earnings just a couple of weeks ago was trading below $80. Trades, 22 times sales, that sort of thing. So I think that, we're seeing this action in the names that have already broken. Let's see what it takes to break a couple of names like this. And we have seen some of these like names that trade at multiples of sales that are just outrageous, that don't make money. Palantir is one of them. The stock now, to me, is broken. A Palantir. You look at Asana down 19%. We mentioned that one earlier. The Zoom, it just can't catch a bid. DocuSign down 6%. So these things are really fascinating to me, like, because I've seen this before. You know what this feels like? This feels like late 2001 and 2002. People don't remember what 2002 was like, Danny. I don't know if you do remember, but like the internet bubble burst in like 2000, and then there was fits and starts in 01 and 9/11 and Enron and all that sort of stuff in 01. But 02 was the worst year of that entire bear market, because all of these sentiment stories that were so good, they just got worse every day. And it was like one steps forward, two steps back. All right, Amanda's saying our buddy Stock Market News is coming in here. Can you bring him in, Amanda? You're
he's in.
There
Hey,
you are.
Dan.
How are
Hey,
you
Dan,
guys?
before you walk,
Yeah.
as you welcome in, I want to make one comment on that because it's super important what you just said. 9/11, obviously, that tragedy aside, what the Fed did after that was it cut rates basically to zero, right?
Yep.
Companies that should have folded, forget about 9/11 and what happened in 9/11. Companies should have folded post-2000 bubble blow up, were able to survive longer. What's the same comparison as right now? Basically, rates at zero. Companies have gone longer. So the anticipation, every time we get a little inkling that the Fed may hike or Fed fund futures start to trade that the Fed's going to raise, what happens to growth stocks? So anyway, there are some similarities there as well to the pattern. Anyway.
No, it's a great point. You brought it up on the podcast many times. They end up being like kind of zombie companies because they can kind of afford to stick around a little bit. All right, but Danny, stick around though. Don't go anywhere. All right, Stock Market News. How are you, man?
Hey, how are you guys? Doing good. I see we also got Stock Talk Weekly up here.
Maybe we have him, maybe we don't.
Oh, can you not hear me?
Amanda's operating here.
He's on. I can hear him.
Hey. I can't hear him.
I've had this happen multiple times.
I want to hear what are we missing here? What's under the radar that you guys have been talking about on your spaces that we're missing right now?
Well, one thing, I guess, Danny, you might have to let him know when I'm done. But quickly, you guys were just talking on it there. Zoom reports earnings today after the markets close. As you guys were talking there, the clear expectations are for the stock to move lower. But as we were talking on our earlier spaces, that is literally the way that everybody is expecting and everybody is thinking. So it's fascinating to see if this could possibly be a bottom for that entire area. Stock Talk Weekly is also up here now, host the trade of the week every single Sunday. And I did choose the downside on Zoom. So I don't think this will be that bottom for it. But, the sentiment on that area is extremely, extremely bearish. And who knows, maybe it got just a little bit too bearish. But I think that a big earnings in that area is something that, like, when you look back on it, I never want to call bottom because I have no idea. But this is the type of area that could possibly cause that. I see we also had Dan dropped off. Oh, he's back.
Did Dan drop off? No, he's on there.
I think
Dan,
we're trying to fix the problem.
Okay. I will say, though, one interesting thing, I didn't look at this yet, but what's crazy is how efficient the options market is. The option market basically tells you what to expect as far as a move on a stock. It doesn't tell you the direction. It tells you how much volatility is priced in. I didn't look at Zoom, but I would imagine it's something like 10 to 13% move is going to be priced in for tomorrow, whatever the result is. But I don't have it in front of me, but it's a great way to kind of look and see. It doesn't help you pick the direction, but it definitely tells you that vol is going to be there. So, Dan, you back on?
I'm back. Sorry about that, guys. I was having some technical difficulties. Danny, you jumped on when we were on with these two guys on Friday. I love the stuff that they're not just focused on the biggest, shiniest things, or the largest cap stocks. And so, like I said, when we jump on, we hear some great analysis all the time. What else are you guys? What else are you looking at, or do you have questions or stuff that you want to kind of hit us on? Because we really enjoyed our conversation the other day.
Yeah, I'm looking at a couple things today. I was kind of looking for MU and TSM to take a turn on the semiconductor roulette. Coming out of last week, we had relative strength in NVIDIA and AMD, and I thought they might cool off today. They're not down big, but they're trading relatively flat. We had a really strong open for Micron, which I traded some calls on. Thankfully, I got out of those in the early morning because the stock has come down since then. I think it was up, almost 7% this morning off that morning pop, and then it's kind of fizzled out. I'm looking for it to kind of magnetize to this 85 level for the rest of the session intraday. I might make another day trade coming out of that towards the end. TSM, I also expected a big open. We had that. It's kind of rallying now back in the second half of the day. I think that probably retests the daily highs. So TSM and Micron were two I was looking at. I was also expecting rare metal mining to make a run this week. The lithium, cobalt, and steel miners, although steel isn't a rare metal, but I do have it on my metals watch list. But, today we're seeing strong day for STLD, Steel Dynamics. I don't know if you guys know about that one.
No, but let's talk semis for a sec, because I actually, we just mentioned Micron before you hopped on before. And the fact is that the company, made a comment about supply chains, are some of the things that they've been dealing with, kind of abating a little bit. That stock, you saw what happened on Friday, gapped up and then gapped up again today. And like you said, it came in a little bit. Taiwan Semi, I think, is one that has obviously been in this huge range between like 108 and where it is right now, like 125 or so, really since early spring. And that's one to me, I think, is like a reload because when things get turned back on, they are basically the foundry for the world, right? And so I think your point about coming out of AMD and coming out of NVIDIA and into some of these laggards makes total sense to me. I don't know if you saw the move in Seagate and Western Digital a couple weeks ago. And I'll mention one other point. The week after next, starting, I think it's on Tuesday, November 30th, and I'm going to be down there. Credit Suisse is hosting their annual tech conference. It's one of the first in-person big tech conferences. All of the big semi CEOs are going to be there. The keynotes are Intel CEO, Lisa Su from AMD, Mayorta from Micron. The list goes on, AMAT, Dickerson. So that is usually a week where a lot of stuff comes out. It used to be the week that a lot of companies in the semi space did mid-quarter updates. So keep an eye on that one because, we get out of this holiday shortened week and then all of a sudden we're coming in hot and there might be a bunch of pre-announcements there. And if the dialogue is optimistic, basically that some of these supply issues are about to abate, they're going to come in for the cheap names and the way they came in for the way they came in for Micron in the last couple of days, and maybe it breaks out TSM, if that makes sense to you guys.
Yeah, no, I agree with you, Dan. If you look at TSM chart, since late March, early April, it's been trading in kind of this wide range in between that 108 and 125 level. And I think if we get enough momentum on the 125 to one, we came up this morning, I think all the way up to 128. So I think if we can get out of that, 125 to 128 cap with volume, I think this thing breaks out higher. a lot higher actually. So I'm looking to get long on a retest of that 128 and break, and then I'll probably try to get out of those options for the meat of the move. But TSM is a name that I really like you said. I think it's been lagging AMD and Nvidia, especially considering the price action over the last few weeks. Micron's another name I'll watch, but I want to see it hold near this 85 level, and maybe hopefully I would like to see Micron close out the day near that 85, and kind of just retest it as an intraday support. But yeah, I love both of those names, going forward.
Do you guys look at any of the bank stocks here? Like on days when rates are up, they're just raging, and it just seems like just a simple trade about the direction of rates, or do large cap banks not interest you guys?
No, they do. I mean, yesterday on Play of the Week, who is it that picked the 3x leverage financial exposure? So I do Play of the Week every Sunday.
But TSDR
Yeah,
helped to get to the 3x.
No. He picked Shinobi picked TNA, which is the 3x leverage small cap.
Oh, my bad.
But somebody picked the I can't remember who it was. I think it was I don't remember. But anyways, we do Play of the Week, and somebody picked financials this week for a move up higher, and so they're good right now. I'm not sure this will last. Oh, sorry, yeah, FAS, yeah. Equity Junkie, one of the audience members picked FAS this week, and that's moving nicely today. That plus 6%. I like to play FAS when I'm playing financials because I'm more of a high beta trader. I'm a younger guy, so I have a little bit of a higher risk tolerance, and I like a little bit more beta. But I tend to play FAS for the trade when I see financials doing well. I think there's a shot this carries out through the week. I think it could trade higher.
I got a question for you guys. So you guys, every retail investor, if you want to call yourselves that, tends to approach the market a little bit differently. You seem pretty disciplined in that you don't have to understand everything that company does, but you get a sense for when something seems to be underperforming or overperforming relative to its peers or whatever. But for the retail people that are out there that tend to hold on to stocks when they're underperforming, that the reason they got in the stock turns in not to the reason that they're holding it, waiting to get their money back. It seems like you guys obviously lose on some trades, make on other. What's your attitude on that stuff? Just cut your losses and move on, fight another day.
Yeah, I used to be like more long-term and swing trade minded when I first started trading. So I've been trading for 10 years now, but I started when I was 18. My first 4 years were very up and down. And, I kind of reflected on that in my fifth and sixth years and kind of looked back and I was like, what did I do wrong? And to me, in the vast majority of cases, it was that, I was letting my conviction interfere with my position management. Right. And so that's what I always try to say. Like, don't let, your conviction goes both ways. Like the ego goes both ways, right? Like if you're down on a stock, you have this feeling that, okay, it's got to rebound. A lot of retail has this feeling like, oh, I'm down 5 or 6%, it's got to rebound. But instead of, that's just completely psychologically driven. Instead of them looking at the chart and being like, hey, did the chart forfeit a key support? Has it gone from an uptrend to a downtrend? Like retail traders, in my experience, don't really ask themselves these sort of questions. They kind of just look at their position and they're like, oh, I'm down, it's got to go back up, or hey, I'm up, right, it's got to go up further. So yeah, I cut my losses very, very consistently. Not always the same size. There's day trades where, if it's not too low of a float or too, as long as it's not trading choppy, I might do a 7% stop loss on a day trade versus like a 10% stop loss on a swing trade. But I'm very, very consistent and disciplined, or at least I try to be, about cutting losses because I'm very opportunity cost focused. Like I'm constantly rotating my portfolio. I probably rotate between 3 to 4 positions in my portfolio weekly. So, I'm trying to constantly be in these themes, constantly find out where the liquidity is going. I study volume ramps a lot. So, I'll pull up like these huge volume charts sector wide, and I'll look at the volume ramp over the course of, a week time frame, month time frame, 3-month time frame, and kind of see where I think the money's going. So yeah, for me, I'm always cutting bags because it's an opportunity cost thing for me. I'd rather reallocate that capital. And in my experience, taking a 10% loss, reallocating that capital to what you think is a winning trade is going to recover that 10% loss way more quickly than waiting for a bounce, in the bag that you're holding. So I'm a big proponent of not holding bags. And
what do you think? So let me ask you a question. So you're 28 years old, you said? Is that
28? Yeah.
I mean, that's great. I wish I was 28. So you haven't seen. I mean, it sounds like you you are ready to trade a very volatile market. This is the most volatile bull market I've ever seen. But you've only known the Fed, right? You've only had the Fed has your back. You've basically been trading at 0 to 1% rates for your entire life. So
Yeah,
and
I've only been trading for 10 years. Yeah.
Right. So if I were to ask you, if the Fed were to raise rates 5 times, or it would start to price in that they were, let's fast forward a year from now, Fed funds are at 1%, and it looks like they're rising. I mean, you don't have a playbook for that per se, but are you going to watch all these algorithms and all these things to kind of guide you? Turn like
Yeah, I'm a very volume focused trader, so like I'll continue to monitor volume, but I also understand macroeconomics well enough to know that increased rates are going to lead to a compression in a lot of these growth and tech names, especially the smaller cap ones. The more speculative and the more forward growth is priced into the equity, the more they suffer typically from rate increases. And I've done, even though I haven't traded in markets, before 2010, 2011. I've still studied markets, from the past and tried to do my due diligence and learning, from history without having gone through it.
Yeah.
Of course, though, there are definitely experiences, like you said, I haven't traded in a very high risk policy environment, which will be new for me going into next year because I do anticipate multiple compression in a lot of these names. I want to take, long exposure off the table, or at least shift a lot of it away from growth and tech going into mid to late next year. But timing that is really the crux, right? Timing it is what's hard, right? Because you want to participate in a bull market, but you also don't want to get caught holding the bag. So, I'll be gauging that as we go into next year.
Yeah, I would say one last thing I would tell you guys to watch. Credit spreads, have been basically as low as they can be for a long period of time. When credit spreads start to widen at all, it's over. When I say it's over, I mean everything is going to drop, and that's because you look at something like a Carvana. You guys start to look at these companies that think that they say they do what they do, like sell cars. They don't buy and sell cars. That's their side business. What they do is finance cars and sell into the securitization market. It's names like that people need to understand, because someone's going to wake up and say, why is Carvana down $100 today? Numbers look good. They're buying it because the only advice I would give you guys for these trading cycles is, and we've seen credit spreads widen literally tiny bit, and then all of a sudden the market either comes in. But now that we're in the taper mode and so forth, I would watch credit spreads. And it doesn't just touch financials, is my point. It touches everything in the market that sells something and securitizes something. That's all. That'll be the end of my rant today on that. But if I could give you guys any advice.
So, Danny, since the financial crisis, where have we seen little pockets where have we seen it within specific
Yeah, we saw
sectors?
it in oil. Yeah, when oil dropped a lot a few years ago, we saw it happen there, right?
So back in 15, 16, and basically that helps make your point, because back then, what did we see? We saw the dollar rally and we saw rates rally, and then you saw the energy names as the commodity came in. You started seeing that spread widen,
exactly.
right?
And then the malls, obviously, we've seen some fits and starts with mall REITs and so forth, when not just COVID, but even prior to that, in 12 and 13 and so forth, when credit spreads were widened, it would affect them because they obviously are very, very levered. So, guys, I mean, in 2008, everybody was bailed out with TALF and TARP and PPIP and you name it, right? It didn't matter what it was. And everyone in that cycle thinking that it meant, you know what, maybe they do bail them out again. Maybe this happens all over again. There'll be more programs. But I'm telling you, if you look at it objectively, that's the stuff you really got to watch. And you'll start to see moves that you don't understand why they're happening. And I guarantee you it'll be in names that appear to be a retail name, a consumer name, or just a pure auto, but it's the credit spread widening that's really behind the scenes that's causing a backup. So,
well, listen, guys, we really appreciate you hopping on. Danny, it was awesome to have you, but our friends, Stock Talk Weekly and Stock News, wait, hold on, I gotta get your name right here. I got it, because you guys, we're gonna have to make this a little easier. We're gonna have to have first names, but Stock Market News and Stock Talk Weekly, we joined you guys, Guy and me, on Friday. We had a great conversation. We appreciate you guys joining us today. Danny Moses in the house. Thank you guys very much. Thanks for listening to this episode of Trading Spaces, brought to you by CME Group. If you like what you heard, follow us on Twitter @_Trading Spaces and join our Twitter Spaces every Monday and Wednesday live at 1 p.m. Eastern. You can also follow On the Tape in your favorite podcast store for new episodes every week.